Welcome to the Investment Process Channel. I am C3 Christopher Campbell. This channel where we teach people how to create generational wealth through trading. Let's get into week 8 of our trading plan. And this week we'll be discussing how to trade gold futures. That's primarily what I've been trading the past couple of weeks. I'll give you 5 of these. We'll give you 5 easy steps on how to trade these gold futures. Let's get into week 8 trading plan. Didn't quite make it. Let's clean this up and figure out where we're going from here. Price has not actually made it back to this area. We've had several times it's tested this imbalance here on the 4-hour. It might be gone. Looking at this, we got some right side ranges even with this gap down, and it cleaning up that gap. Had a higher low here, higher low here. It actually came back into this imbalance, so more than likely it may be cleared up. It may never get back down here. This is the daily retracement I was looking for last week. It did not do anything. It's look like it's just consolidating right now. Probably want to say it still may, this is the 4-hour, still may come down here before expanding up to 6163.25. That was our last high. What was the high of this? 6163. So take out the 25. Yeah, 6163. So still looking for price to come back here before getting a position again. Overall, let's take a look for S&P. Monthly candle still bullish overall. Actually we got a higher than 163. We got a high 6186.50 that we want to get back to, but that's our intermediate high. The price could come to and through to go all the way up to 6186.50. So with that being said, overall bullish. Likelihood we're week 3 of February. Look like we got support here. Here's our lower low, higher low. Looks like a new higher low here. Little bit of imbalance for the new week coming in. But let me copy this, clone it, and drop this to our weekly where our high is 6123.25. So immediately, of course, we're looking for price to pull back to 6123.25 for the beginning of the week. Will it get there? Let's take a little bit closer look. Nice imbalance here. Looks like it actually may come to this 6098.75. Again, this is the daily for last week. We got kind of a doji for last week on the daily on Friday. So it's probably highly likely we're going to visit this area before continuing up. Highly likely. 4-hour. Yeah. Got 2 imbalances here. Let's trading plan for the week. Again, consolidation. Not a lot going on for S&P right now. I would say this is our range currently on the daily, right? This is our current range. Have an imbalance right here that we're looking to clean up. Imbalance has been cleaned up here and here, but we also have this range within this range. This is the reason why I'm saying that it may come back here to that 4-hour equal low. That would be really nice because price will be at a super discount. If we just look at this range here, go down to the 4-hour for this one. looking at this 4-hour. Again, we have high, lower high, lower high. Had a break of structure here. To me, high, price came back down, and it's continuing up. Has not broke this high. Now, its previous high has been tested a couple times. So again, my thought is, again, overall, the month has been bullish. Probably get a retracement into this imbalance here on the 4-hour and the daily, and then continuing up to and through 61, 63.25. So that's the plan. If we do not get a close above 61, 63.25, look for price to continue back down, because it's tested it a couple times, but at the same time, just understand where we are in the market. Again, monthly's overall bullish, and we have the ability to retest 61, 63.25 and continue to and through there. Let's go over here to NASDAQ. It's been moving. Had a 4-hour here, came back right below, tested, came back to that gap down. Same thing like on S&P. We had a gap down here, cleaned up that imbalance down here. We had a break of structure right here at 21.891. Excuse me. What was that? It was open 21.95. 21,905. Break structure here, and it's been going up. It's pulled back into that imbalance. You see that I have marked and continuing up. All right, let's take a look where it's going to. Let's see where it's going to. Okay, again, overall monthly is bullish. Let's take a look at our weekly. We've been pretty much moving right within this zone here. Weekly got a high here of, go ahead and mark that. It's weekly high. 22,426.5. And our low here of this range is, sorry, low 2063, 2693. That's our low of our weekly range. Left a little imbalance right here on our weekly. Go ahead and clone that, pop that there. So looking for price to come back into this area here. Not exactly the 50% mark, but looking at this range here, definitely come up to retest 22,428 daily. Yep. Got two areas of imbalance for when the market opens. Daily. Breaker structure here, high. Did not pull. Looking for our low here. I believe this is our low currently. Again, we had that 4-hour imbalance where we have some equal lows. Excuse me. We have a 4-hour where we have equal lows. That's why I have that marked with that arrow. That's what that arrow means for me. Again, you can identify things the way you feel or you think is what's best for you, that would be a perfect setup. So here's our 4 hour for price to come back into this imbalance. This is our daily. Dang. Yeah, for price to come back down into this imbalance, that would be ideal. Cool. All right. We also have one here. So these two imbalances, let's look at it on a 4 hour. Got support there. Definitely probably going to revisit this imbalance here. 126. Little bit of imbalance here on that 4 hour. So ideally coming all the way back down here to, what is this open? 21,834 would be ideal to get price to come back down here, then continue up all the way up to 22,428, to and through that area. That's ideal. If we test it, we see it's going there. If we do not get confirmation that it's going up, then it'll probably be coming back down here all the way to our equal low 21,065. So look for price to pull back at least to 21,969. That's our weekly imbalance where price will touch. Nice to have would be all the way down to our daily down here of 21,857. But the price make it, just continue to go up. Just understand that we got a little bit of imbalance right here again on our daily. The price will probably clean up before continuing up. Maybe not. Looking at that 4 hour. That 4 hours, very little bit of imbalance. So we may touch into that area and continue up the way NAS has been working. Probably will before continue up to 22,428 to break that high. So, okay, let's go over here to gold. So bearish week. Let's take a look at what gold is overall. 4 hour imbalance down there. Looked like it was going to and actually hit. Weekly retracement. Did not make it to that. Got some nice highs out of it. And let's see where price is going to come back to. Overall, again, bullish month. Got a long wick on here. We had that again, super bearish Friday candle. Will it turn back bearish? We're in the middle of the month. It looks like it quite possibly can. And again, but it can still finish bullish. We have that weekly retracement here at weekly retracement here at 28.62. Daily. Looks like Friday is trying to reach for it. I don't see any imbalances, but it did leave an imbalance left here. So price could at least potentially clean up this imbalance on this daily. This is our range right here. Currently, it's our daily range. Looking for price to at least come back and touch this area. If it's going to continue down, it's going to continue down. 2780, where that monthly imbalance was. It'll probably touch that. If not, it may just, and this is the 4 hour, it may just clean up this imbalance and then continue up. But right now, it has support here at 28.84. had a bracket structure here, but 28.84, look in this area, and definitely at 28.62 for price to get support and then continue up. If not, if it breaks 28.62, it's going to probably continue down to 27.80. But that is our plan for this week. I'm not going to do Bitcoin. I'm going to Bitcoin has just kind of been moving sideways. Just be patient with Bitcoin. So we're going to go over 5 steps for gold futures trading. 1, we're going to take a look at market momentum. 2, the range of price. And number 3, whether price is in a discount or premium. Then confirmation of market momentum. And then our risk management for our entries. Those are our 5 steps for gold future trading. Let's take a look at it on the chart for gold for this current month. So as you can see here, we're on a daily chart for gold here. And right now we're going to look at the market momentum. As you can see, overall gold is up. We had a retracement here. It looked like it tested this high a couple of times, then finally broke it and broke this high with a gap up actually on a daily. And if you're swing trading or trying to have a position for a long period of time, for a couple of weeks, couple of days, whatever the situation is, this is probably more of the time frame you want to trade on, the 4-hour and the daily. Anyway, if you're trading day trading or scalping, this is probably not a good plan for you, especially on this time frame. But it all looks the same. So again, we're looking at overall market momentum. Momentum is up for gold. So if you're taking a short right now, even with this bearish daily candle from last Friday, I would not necessarily suggest it. Looking at this overall, gold has just been very bullish. I would just wait for opportunities to get back in the market. Now, with that being said, once we identify the direction of the market, we want to look at the price range. So again, the last time price made a new high, it broke this high. What was this candle here? The high was 28.01, and now we're up at the high is 29.68. So totally different range. So the breaker structure was right here. So I'm going to say on this daily, this is probably the whole extent of our range. And I typically use a rectangle here to identify our range, if I can get it. So I use a rectangle to identify the range. Right here, we got a candle. The bottom of the range would be our low on this candle here, which is 27.32. That's the bottom of the wick. And then all the way up here to our high, which is the top of this wick, which would be 29.68.5. If I go look at this one, 29.64, yep, 29.68.5. So that's the bottom and top of the range as it stands since the last time the market broke an old high and went to a new high. This is the support right here, and that's the top of the range. So on a daily, this is the range currently. And now, once we identify the price range, we want to know where price is. Is it a premium or a discount? So in a bullish market, having price at a premium is a higher risk. So what I mean by higher risk is the amount of movement you get when price is at a premium. Sometimes the juice is not worth the squeeze. Now, some traders are more risky and they'll trade the same lot size or the same amount while price is at a premium, and that's fine. For us and for the people that I mentor, I would tell them that's not such a good idea. What we really want is price to come back below this 50% mark right here. And if you do Fibonacci retracement tools, that's fair. But, you know, price is at a premium. Now, if it's a bullish market, do we want to buy price at a premium? No. We want to buy a price that are deeply discounted as we can possibly get. And right now within this range, what is this? 2851 is our middle mark. So anything below that is definitely worth a buy. Now you can go on lower time frames and find different ranges where there's support and where there's also support and also resistance. Even if we look at this, so price broke this high, and we can say that this here was the new low. And if that's the case, yes, price is at a discount, and this would be a good opportunity to get in. We would be cautious and wait for confirmation, which is our next step. The price is not going to go below this support right here, right? Since we're saying this is the low. So, and then vice versa. If price is down here, we would look for confirmation that price is not going to go below here. But however, looking at this, we got a candle with equal low. So maybe highly likelihood that price is going to come back down here for gold. Highly likely. So with this being said, again, looking at market momentum, it's up. Price range for this on the daily, this daily time frame, we outlined the high of this candle, which was 29.68.5, and then the low of this candle, which was 27.32. So that's our range right now for where price has come from and gone to since it broke this previous high. Prices at a discount premium right now with this price range that we've identified, prices at a premium. So for me, it would benefit me to be patient and wait for the market to retrace into this area here where price is at a discount before continuing up. That's where you get more bang for your buck. And vice versa. If you were shorting and you notice price put an all-time low down, and well, typically if it's a low, there's a past history, but a price is putting a low down, and you're looking at price being at a discount from a new range, you wouldn't want to trade that. You would want to trade it from a premium aspect if you're doing sales, because the market would be in a bullish state for gold. So trading gold futures, we want to make sure we're present and understand where the market is currently. So we look at market momentum, we look at price range, the range in the price, then whether the price is at a discount or premium, and then we look for confirmation. Again, looking for confirmation. If it's bullish, we're looking for price to be below the 50% mark and get a nice confirmation candle. Since it's bullish, we'll be looking for a bearish candle followed by a bullish candle. And to let you know that the market has changed back to going bullish at that point in time. How you get that confirmation? On a daily, you look at a 4 hour, maybe an hour, get a nice solid confirmation that price has decided to go back in a bullish direction. And after all of that, you would look for your entry. Now with your entry, we've identified that this is the bottom of the range. So this is the reason why it's most important that we identify the bottom of the range, the top of the range, and where the price is at a discount or a premium. Premium is above 50, discount is below 50% from that within that range. Once we identify that, let's say price comes down here to, what was this high, 27.78, and it comes right into this gap here that we had, it's like about 2 or 3 weeks ago, right? 2 weeks ago. And it comes right back into this, and we get that bearish candle followed by a nice bullish candle, and it doesn't reach all the way down to this bottom of this range, right? It's giving us confirmation that it's going to go back bullish. So now this is where the risk management is. Our stop is going to have to be back here just in case price that decides to continue to go down, right? So we set our risk based off on our entry from price below here. So this is why number 5 is probably one of the most important steps of all 5 steps. Managing your risk. And everybody knows, as long as you manage your risk, your winners will always outweigh your losers. So again, this is the Investment Process Channel. This is week 8. We just went over 5 easy steps to ensure you are trading gold futures in the best way possible. And we also went over our week 8 trading plan for S&P, NASDAQ, and gold. You guys have a great trading week. See you out there.